You know, in today's crazy markets, it feels like brands are up against more challenges than ever before. But what if I told you that the key to funding your next big opportunity was already sitting on your balance sheet, just hiding in plain sight? Let's get into it. I mean, think about that for a second. It's a huge question, right? It really gets to the heart of what we're talking about today. It's all about this big shift in mindset, away from just writing off your problems, and instead, figuring out how to unlock their hidden value. So let's talk about this hidden asset problem, because honestly, every single company has them. You know what I'm talking about, those things just lurking in warehouses or sitting quietly on the books, not really doing anything. But here's the thing, they represent this massive, totally untapped source of value.
And this could be, well, almost anything. We're talking about excess inventory from that last product launch, or maybe some capital equipment that's been retired. It could even be underutilized real estate or sponsorships you're not using. And what do most companies do? They just liquidate them, sell them off for pennies on the dollar, and that's the end of it.
Okay, but what if there was a much, much smarter way to handle this? There is. It all comes down to a really strategic shift in how you look at these things, moving away from just getting rid of them and moving towards actually creating value.
And this model is called premium asset valuation. The idea is simple, but it's a total game changer. Instead of your company selling low, a partner like Evergreen Trading actually comes in and pays a premium price for these assets. We're talking value that's way, way above what you'd ever get at liquidation or from typical market rates.
All right, so you're probably thinking, okay, that sounds great, but how does it actually work? Let's break down the process. It's surprisingly straightforward, and it's all about turning what looks like a liability into a real strategic advantage. That really boils down to 3 simple steps. First, the Evergreen team helps you pinpoint those underperforming assets right across your business. Second, they buy them from you at that premium price we talked about. And third, and this is the cool part, you get that value back as trade credits. You can then use those credits to help fund your strategic media buys that you were already planning on doing. And this right here is the absolute key. Let's be super clear about where the benefit comes from. The real win, the core value, is the difference between the tiny amount you'd get from liquidation and the premium price that Evergreen pays. That gap, that is the value you're unlocking and putting back into your business. Okay, so the theory sounds good, but what about the proof? Let's look at some real-world results from some of the biggest brands on the planet. Let's start with Constellation Brands. So they had a pretty classic problem on their hands: outdated bottling equipment and some old corporate aircraft. Stuff that just didn't have much market value anymore. So Evergreen came in and purchased those assets for a cool $8 million. Now remember, that's a huge premium over what they would have gotten otherwise. And what did Constellation do with that? They took those trade credits and used them to help fund an absolutely massive $45 million media spend. We're talking across 15 of their most iconic brands. So what was the result of all this? A 300% return on those assets. Think about it. Instead of just writing off old equipment, they turned it into fuel for new brand growth. That's just incredible. Okay, next example. The J.M. Smucker Company. They had a totally different kind of problem. Because of their rapid growth, they ended up with a ton of surplus inventory across dozens and dozens of product lines. And the result for them? I mean, this is just staggering. A 539% return on that surplus inventory. That is a home run, no question about it. So how on earth did they do that? Well, Evergreen helped them manage the surplus from over 60 product lines. This gave them the trade credits to help fund $66 million in media placements. And here's a great little bonus, it actually supported their sustainability goals by making sure that surplus food didn't go to waste. All right, one more for you. Let's talk about Chipotle. Their challenge is really unique. They have these super popular limited time offerings, right? But that means they always have recurring surplus ingredients that are getting close to their expiration date. Well, through their ongoing partnership with Evergreen, they've consistently hit a 400% ROI on those ingredients. They basically turned a predictable problem into a predictable advantage. How smart is that? And again, this wasn't just about avoiding disposal costs. No way. This was about creating totally new and exciting opportunities. They literally transformed potential food waste into high-impact media, including some really unique sponsorships with places like the X Games and, get this, the National Spelling Bee. So when you step back and look at all this, it becomes really clear. This is about making a smarter, more strategic choice for your business and its assets. It really comes down to a tale of two assets. On one side, you've got the standard approach. You liquidate for a fraction of the value, and you just watch that potential value and opportunity, poof, disappear. But on the other side, you've got the evergreen edge. Unlock that hidden value, get a premium for it, and then reinvest it directly into growing your brand. And that really brings us full circle, right back to that first big question. But this time, it's not just about these big brands we've talked about. It's for you. Seriously, what untapped value is hiding somewhere in your business right now, just waiting for you to unlock it?